What are the biggest clouds on the global market, and what is the forecast saying about the global economy? Is the Nordics still pretty stable compared with other countries? Well, I would like to welcome Colin Ellis from Moody's Investor Service here to answer all these questions for us, of course. So, Colin, could you please tell us what are the main topics right now?
So, first, thanks for having me. It's wonderful to be back here in Aura.
Welcome back.
I think that a lot of the topics are similar to ones that we had about the start of the year. So there's a lot of uncertainties out there, and you can think about the ongoing war in Ukraine with Russia. You can think about the impact of China's reopening as it kind of steps away from some of the harsher COVID measures it has in place, and how does that feed through the global economy. There are also some really big concerns about inflation and how quickly that's going to fall and what kind of impact that has. But those have been the kind of, the big themes really, I think, since the start of the year. I think the new thing we've seen recently is particularly concerns about stress in the financial sector with the failures of Silicon Valley Bank and Signature Bank in the US, and obviously developments with Credit Suisse here in Europe. And I think that's just kind of thrown the spotlight again on some of the risks that maybe were bubbling under the surface that we didn't maybe have on our radars as much as we should have done.
Yeah. So, what could you say more about the situation with like Silicon Valley Bank and what's happening right there? How does that affect on the global market?
So you can never say for certain you're not going to have a financial crisis because it's really hard to see them coming. But so far, although you could criticize some of the policy responses both in the US and in Europe as being a bit different from what people had said they would do in the event of a bank failure, so far the big picture I think is that the fallout seems relatively contained, and that's a really good thing. So we haven't actually yet revised our global forecast. We haven't revised our US forecast for this year because we think that the failures have been well managed in a systemic sense, which means limiting the broader fallout. But that being said, this was always going to be a tough year for the global economy. We were expecting global growth to slow to about 2% this year from 2.7% last year. And we're expecting it to pick up again next year to about 2.4. So this is kind of the trough this year. And different countries will feel that to different degrees.
But also in times of crisis, you can also see new markets emerge. What are the trends?
Well, obviously at the moment everybody's getting very excited about AI and exactly what the potential is there. There's always new technology, there's always new developments. I think we tend to be, it's not that we're not excited about those things, of course we are, but in terms of seeing the real impact, transformational impact in terms of the way the global economy works, I think that's something where it can sometimes take a bit longer to actually manifest. So, we've been talking about driverless cars for 5 or 6 years now, and they're not actually here yet because 80% of the problem can be addressed very, very well with technology. And it's the last bit where the human interaction really matters. With driverless cars, it's very much around some of the liability structures and the need to have somebody in the car to control if needed. With AI, we don't quite know how the safeguards are going to work there yet in terms of identifying artificial versus human generated material. Elements like creativity and kind of inspirational jumps are maybe a little bit harder there. So we're seeing these new trends and they definitely have potential, but we're always a little bit cautious about saying, okay, this is going to change everything tomorrow, because sometimes it takes a bit of time.
Yeah. If we look at the Nordics and Sweden, for example, what's the status there?
So Sweden, in terms of kind of growth and economic activity here, the profile's very similar to what I said for our global forecasts. The difference is because the global economy is made up of lots of countries that frankly are poorer than Sweden, so they tend to grow at faster rates. Although you've got the same kind of drop and then pick up in growth, we're probably expecting GDP growth to be a little bit negative this year in Sweden. But I want to emphasize that's not a big deal, because in the work that we do, where we look at credit ratings and we look at medium-term risks to people's ability to pay their debts, 1 year's kind of negative growth or one tough year is normally not enough by itself to move the sovereign rating, for example. So when I look at Sweden, which is a AAA rated sovereign with a stable outlook, it's one of the strongest kind of countries we rate, in my view. And yes, there are always risks, but I think Sweden and the Nordics more broadly will come through this year still in very strong standing in terms of the way we think about their credit risks.
What strengths does Sweden have?
Oh, I mean, it's a very wealthy, pretty well diversified economy in terms of your average income levels. The track record on fiscal performance is just outstanding. You know, I mean, our forecast for debt to GDP in Sweden this year, I think, is a bit under 34%, which is very low. But that's also lower than, I think, 39% that you had back in 2018 before COVID. Right? That profile of reducing debt over the last 5 years is very rare when you look at anywhere else in Europe or indeed the US or other advanced economies, because lots of countries had to ramp up spending and borrowed money to do it during COVID, for example. It didn't happen to the same degree here. So the fiscal discipline in Sweden is very, very strong. And you can point to pockets of risk, like we know there's a lot of household debt, and that's tied up with relatively short-term mortgages in terms of links to the housing market. You know, investors do have concerns about commercial real estate, and again, it's a bit more short-term funded here. But I'm pretty confident that Sweden's rating is going to be where it is today in a year's time.
Well, thank you, Colin, for being here answering all these questions for us.
Thank you very much.
Enjoy Åre Business Forum.
I intend to. Thank you.